The Accunet Mortgage and Realty Show is sponsored by Accunet Mortgage, an equal housing lender, NMLS ID 255368, and Accunet Realty Advisors, which is a separate company from but still affiliated with Accunet Mortgage.
Putting a roof over your head without the headache. Get answers to all of your home buying questions. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
And our Sunday best to you on this Memorial Day weekend. Welcome to the Accunet Mortgage and Realty Show. I'm Steve Kettlear, along with Accunet Mortgage and Accunet Realty Advisors owner Brian Wickert and licensed millennial loan consultant David Wickert. So we dive right in with the April home sale numbers for this year compared to the past year.
Yep, I nerded out this morning, Steve, and this is based on a Wall Street Journal headline that caught my eye, and it said, U.S. new home sales fell more than expected in April. Possible sign of weaker demand after run-up in prices. And so I used to carry this old rule of thumb around in my head that, you know, in a typical year, 1 million new homes were sold and about 5 million existing homes changed hands. Turns out that that was only true for 5 years in a row, from 2002 until 2006. By the way, what U.S. government agency do you think keeps track of new home sales? I'll make this multiple choice for you guys. HUD, Housing and Urban Development, Commerce Department, or Census Bureau? Steve?
Commerce Department.
I'm going to say Census Bureau.
Yeah, Census Bureau.
Huh.
I was with Steve. I started poking around at the Commerce Department site, and no, it's the Census Bureau for some reason. Anyway, in 2002 we had about 973,000 new homes. 2006 it was 1,051,051
that were built or sold.
Built and sold. Sold.
Okay.
Actually changed hands. So these newly constructed homes throughout the United States.
Yeah.
The peak year was 2005, 1.28 million.
That's a lot of houses.
That's a lot of houses. All right, now this is shocking. 3 years after the bubble burst, the subprime mortgage-induced financial crisis, home sales hit under 500,000. So we went from 1 million. Brian's thinking, yeah, it's 1 million. Also, man, goodness, it's 480,000 in 2008. And now, ready? Hold on to your jaws. 306,000 was the all-time low in 2011.
Oh,
only 300. I mean, think about that. We went from 1 million, two
that were built. So, like, they put a shovel in the ground, built a new home,
and sold it.
Sold it.
Only 306,000. So a lot of people got out of the industry. You have to go back to 1982 when I just proposed to your mother, David.
Oh, okay.
1982, Reagan was president. 412,000 homes were built that year. But get this, there were almost 100 million less Americans alive in 1982 than in 2011. So anyway, that's a lot of numbers to say that new home construction suffered a major crash.
Correct. In
the past decade. All right, so now in April, here we come along, April 2017, we're at 569,000. So more than 500,000. Nowhere near that million that I carried around in my head for so long.
No.
Okay. Median price, by the way, was $309,000. All right, so let's just kind of tuck that aside. So you get 569,000 new homes built and sold. That's the annualized pace.
Sure.
For April. Okay, great. Now the National Association of Realtors, of which I'm a card-carrying member, a licensed real estate broker here in Wisconsin, they came out with their number for April for used homes, existing home sales.
Yeah.
And that was also down 2% from a year ago. Not bad. 5.4 million. Homes sold. That's the annual pace at which homes sold in April. All right. In the Milwaukee area, 5-county Milwaukee area in April, we had 85 fewer home and condos. So I lumped together homes and condos because the Realtors Association nationwide puts those together. So we had 1,987 single-family and condo sales. That's 85 fewer than a year ago. 4.3% on a percentage.
To me, that's
basis.
Immaterial. 85 units, but...
Yeah, and my theory is that a lot of those in this super hot market might be going for sale by owner. Because I'm just kind of thinking about transactions that I'm
looking at. Okay. That the market's so hot that you can just stick a sign in your yard and do it yourself.
Correct.
Okay.
Which can be a disaster.
Would not recommend that, but... Okay.
Well, it depends on who you are. Okay. Not for everybody, but sometimes, we mortgage guys end up with the blind leading the blind.
Yeah.
But anyway, so it turns out that my old rule of thumb is still correct. It's 6 million transactions per year, but it's now tilted more towards existing homes.
Can I just point out in this article that they note that the margin of error is 10.5%, though? So that's
on the new home sales.
On the new home sales, that's huge.
Yeah.
So we might be building the same as last year.
You don't know. All right, but here's the real problem that I want to get to before we take our first break. The real problem is that our great country is creating about 1.5 million new households per year.
Right.
1.5 million. Let's say half of those people, 750,000, want to be homeowners. Well, we're not inventing new existing homes, right? That population of home inventory is static. So you got 750,000 possible. I'm just making that number up, and only building 569,000. We're short.
Yeah.
At least 250,000 homes. So that is likely to keep upward pressure on home prices and demand. All right, so when we come back from this first break, we're going to talk about exactly how hot are the hot markets in the Milwaukee area. I've got the numbers, and I think you're going to be surprised when we come back.
Right here on the Accunet Mortgage and Realty Hour. And if you have a question, you can reach us on the Accunet Mortgage Talk and Text line at 414-799-1620.
Expert advice on buying a home. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
WTMJ's classic free ride is out of the garage, and it's ready to head into yours. You can register online to win the 1968 Valenti Oldsmobile 442 convertible by heading over to WTMJ.com. It's sponsored by Prescient Financial Solutions and Northwestern Mutual. And don't forget to text the word RIDE to 414-799-1620 and check out the photo gallery of your next car. Brian Wickert and David Wickert are with us. It's the Accunet Mortgage and Realty Show talking April home sale numbers.
Yep, and just by the way, 2,783 people did list their condo or single-family home for sale in the five-county Milwaukee area in April. So it's not like, there is fresh inventory coming online. Sure. All right, but I thought, hey, let's take a look at, what people think are the hot markets, or at least what I carry around in my head. How hot is hot? All right, $250,000 to $300,000 price range in Brookfield. There are 37 active listings in the multiple listing service. How many do you think have accepted offers? David, did I already tell you the answer? Half. Steve, what do you think?
I'm going to go with the half.
Half, 29 out of 37. So
wow.
There are only really
How does the
8.
other guy feel?
There are only 8 that don't have accepted offers. Okay, $400,000 to $450,000 price range in Whitefish Bay. There are a whopping 8 active listings in MLS. 4 have offers and 4 don't. Okay. $300,000 to $350,000 price range in Wauwatosa. 17 active listings in the MLS.
All of them.
12 have offers, so there are really only 5.
So it is slim pickings out there.
Yeah, Greendale. Then I just thought, okay, Greendale, 175 to 225. 10 active listings. 8 out of 10 have accepted offers. Okay, so here's what I want to say. Last week we had a real estate agent tell us, I think buyers are starting to dwindle in numbers. I said, really? Why? Well, because people who haven't found a home by this time of year often face having to renew their lease, especially if they're millennials, right? Because they got their first lease out of college right after they graduated, typically in May or June. So they're kind of at this point where they're like, yeah, I didn't find a house. I wrote an offer. I'm throwing in the towel. I'm just going to renew my lease. And then I was talking to our new leads desk manager, my son-in-law, Tim Holdman, and he confirmed that this week because he's following up on people whose pre-approvals we've issued, 3, 4, 5, 6 months ago. And he is getting anecdotally more people saying, yeah, you know what, we're just hanging it up for this year. We tried, couldn't find anything, couldn't get in the end zone, and they're hanging it up. So my message is, hey, don't quit. You're having a little bit of a thinning of the herd here, as some people do throw in the towel. And I've got the antidote. There are 112 active listings in Waukesha County between 700,000 and 900,000. Only 23 have offers.
Hey.
So you just got to buy a more expensive home.
Exactly.
This is it. There's plenty of inventory.
Sure. Just in a different range.
As you move up the food chain. So it is tough. You've got to be the best version of yourself, right? You've got to have that rock-solid pre-approval from Accunet that shows the seller that you are the real deal, and you got to be working with a really good buyer's agent who knows what they're doing. I'm afraid you might have to pay more than the asking price.
For sure.
I was talking to an appraiser. It was allowed. It was in a golf setting. So I was not trying to influence, but it is an appraiser that's doing appraisal work for Accunet through an appraisal management company. And he says that he's actually making time adjustments on his appraisal reports in the competitive price ranges, meaning there's a spot on the appraisal grid where you say this house sold last, November, and now I am just going to add value to that comparable home sale because it sold 6 months ago.
Wow.
And he's adding, he told me, 1% per month in some of these really hot price ranges.
Wow.
Although he kind of said he's only starting that maybe with March sales. So if he's got a sale prior to March, and now he's using that comp, he's going March, April, May, boom, add 3%.
Wow.
Just because time has passed.
That's $6,000 on a $200,000 house.
Right. Okay, so one thing you can't do if you're going to get an accepted offer in a competitive market is say, hey, my offer is contingent upon the sale of my home. When we come back, we're going to talk about how to buy your next home before you sell your existing one when we come back.
Right here on the Accunet Mortgage and Realty Show. If you have a question, you can reach us on the Accunet Mortgage Talk and Text line. That number is 414-799-1620.
Don't break the bank to get into a house. Back to the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Well, the Brewers close out their holiday weekend series with the Diamondbacks later today out at Miller Park. Bob Uecker and Jeff Levering will have our coverage beginning at 12:35, sponsored by your Milwaukee Honda dealers. It's the Accunet Mortgage and Realty Show with Brian Wickert and David Wickert. So how can you buy or make an offer on your next home if you have a home that you've got to sell, but you don't want to be a contingent buyer?
Right. Yeah, that's kind of the kiss of death. If you write your offer, yes, it's contingent on the sale of my home. That one's going right to the bottom of the pile. Dave?
Well, it's because put yourself in the seller's shoes. Then you're waiting for your buyer's buyer.
Correct. So even if that price is higher, I don't think that sellers are accepting that offer. Yeah. They want certainty, and we talked a couple shows ago that waiving the appraisal contingency is kind of the new queen of clubs if you're a sheepshead player. The most powerful card in sheepshead. That's the new, wow, okay, I'm looking for offers that they don't care what it appraises for. All right, but anyway, back to the issue of, great, can I own a home now? And David, you had two of these this week.
For sure.
Where the buyers kind of realized, I think, in one case, hey, we can't win.
And I think part of their stress was having to maybe, they want to be able to go write offers on a home without knowing if they can or how fast they can sell their home. So it's really more than a financial thing. It was a stress thing for them. But what we were able to walk through was if you've got the funds other than the proceeds from the sale of their home, they can still afford to go buy that second house or the next house.
All right, so let's break this down. There's two challenges. One is down payment. Like, hey, I was going to get the money, right? I was going to get the money from the sale of my house, so how do we solve that issue? And the other one is, can I qualify while carrying two mortgage payments at the same time? Because as a mortgage lender, we have to pretend you're never going to sell your house, your old one, and that you could carry both payments indefinitely. All right, so the tools for the job on the down payment side, my favorite one is get a gift from a relative.
Sure.
Right? Because you can always give them their money back after your home sells.
Right.
I did this for a couple up in Minnesota who, by the way, then their father was nice enough to co-sign because they didn't have enough income to carry both payments.
Okay.
So they actually used both of my tricks here. They got a gift for the down payment on the new house, and the dad co-signed so that they could qualify to carry both homes at once.
Sure.
We are now in the process of refinancing that original loan.
Because now they sold their old home?
Their old home has sold. So now we want to get dad off.
Sure.
Right? And luckily rates have actually improved a touch. And so there's one way to do it. Okay, the other thing is this tool in our toolkit called a bridge loan. And that's simply a home equity line of credit on the old house that everybody knows is temporary. And it's called a bridge loan because it helps you get from one house to the next. Now, the issue or the drawback is we can only arrange for a bridge loan up to 80% of the value of your old house. So if you don't have 25% equity, if you only have 20% equity, we can give you a bridge loan because it might help. The bridge loan has interest-only payments. So there have been cases where people have 15-year fixed-rate mortgages on their old loan that jacks up the payment because they're paying so much principal. So going with the bridge loan turns that into interest only. Also, the particular bridge loan we have doesn't have any payments. So there's the theoretical, can you afford the payment? And then there's the actual writing out both mortgage checks every month for a while. This bridge loan, no monthly payments. You pay the interest when you sell your house.
Okay.
If you get to the 6-month mark and you haven't sold your old house, you do have to pay 6 months of interest at that time in order to continue on for another 6 months. But it's really a nifty tool.
Yes.
Not for everybody, but we have it available, and not everybody does. For sure, the big national banks do not have that. And then the third trick that we can do is to give a piggyback loan, in other words, 2 mortgages. Let's say that you have 5% down that you can scrape together from your savings or maybe pull out of your 401k for the down payment on the new house. Income's not a problem. We could do a piggyback loan on the new house, meaning we'll lend you 80% of the purchase price on a good 30-year fixed-rate mortgage. Then we'll give you a home equity line of credit for 15% of the purchase price that you will pay off probably or pay down to zero when you sell your old house. And then you've only got to come up with 5% down. The point is we have tools at Accunet Mortgage, and this is the perfect kind of a thing where we should get on a go-to meeting with one of our friendly loan consultants like David did. You did that?
For sure.
Right. Because there's a lot of moving parts, but we can then illustrate for you right before your very eyes how this can all work and take away that stress and allow you to buy without selling first. When we come back after the news break, we're going to tell you just how low rates have gotten. Freddie Mac's headline, David, was
lowest rates in 2017.
Right now. All right, we'll cover that when we come back after the news.
Right here on the Accunet Mortgage and Realty Show, it's 10:30 as we welcome in from the WTMJ 24-hour newsroom, Colleen Bolin.
Thank you. Home buying advice from the guys who know it best. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
So now we're up to the rate roundup portion of the show, and boy, some big news when it comes to mortgage rates.
Yep, so every week Freddie Mac does their survey of, hey, what are rates out there? And their headline this week was, mortgage rates dropped to the lowest of 2017. Hooray. They do note, however, that a year ago at this time, the average was 3.64%. So
and their average this week, David, was?
3.95. Paying half a point, though.
Plus regular closing costs.
Right. So I'll do that comparison. So without paying any points, Accunet could deliver with 25% equity and all the other right stuff, which, let's not forget, no second mortgage, 740 credit score, and escrowing for taxes, for example. 3.99%, that lovely three-handle. 3.9 with, wait for it, 0 closing costs.
Wait. No points and we're paying. David, are you giving away the store again?
I am.
No, all right.
I am.
Right. We're able to pick up your $1,180 are Accunet's normal closing costs for appraisal and title and closing. That's a lot lower than typical. Like if you go to Quicken, they add a $950.
Or that Canadian bank.
Or the Canadian bank. All right, go on.
But if you wanted to spend that half a point that Freddie Mac notes in their survey, we could deliver 3.875, and the APR is 3.95, which is their example. But it's $2,100 in cost.
Okay.
And the difference in the payment is
minimal. I got to make you say. I'm going to say the APR at 3.99. By the way, is probably 4.01.
Yes.
Okay. Go ahead. What are the difference in payments, David, for paying that extra cost up front?
Sure. The difference in the payment is $14. So, hey, what would you rather have? $14 difference in your payment or $2,000 in your pocket?
In your bank. Okay. What about the conforming 15-year?
On the 15-year, so Accunet could deliver 3.25%. That's with an APR of 3.3, and that's just with $500 in closing costs.
Okay. Now, I had quoted a 15-year fixed jumbo. We have some smoking hot, good, low-priced, out-of-town money.
When you're buying that $700,000 to $900,000 house you were talking about?
Get a 15-year fix. So On a $600,000 loan, we could do a 3.375 15-year fixed rate, and the APR on that is 3.4. That's with no points and 25% equity and a grand total of $550 of closing costs. So some smoking hot stuff there. The 15-year jumbo I quoted.
That's a big payment.
Well, wait. I'm going to tell you about this one. $1.3 million loan. Okay.
Okay.
All right. Payment, just $9,600 a month.
A cool $9,000.
Yeah. I did get an email back from that guy. Said, "Do you offer 20-year fixed rate mortgages?"
Yeah, that's a little aggressive.
Well, I mean, if you make that kind of money, I mean, again, a whole bunch of it's going towards principal. So I'm going to get back to him with the 20-year fixed rate quote. All right. One other thing on this rate topic, though, we were talking about people throwing in the towel and home buying. What if you do put this off? Do we have time to talk about that now?
Yeah.
Okay.
So the math is, let's say that house you wanted to buy was $200,000, and you sign another year for your lease. If rates go up 0.5%, and the value, as the appraiser noted, hey, let's say the value goes up 5%, that $200,000 house now is going to cost you next year $210,000. And if you put 5% down, it's basically the same amount of money to bring to the closing table, but now your payment is $108 more per month.
Because of the increase in the price, and did you bake in any increase in rates?
0.5% increase in rates.
What if I wait longer or home prices go up higher?
Well, it would just to say, hey, if 2 years in a row it goes up 5% in value, and then if we could offer 3.99% today, and 24 months from now it's 4.99.
Okay.
Again, you're basically bringing the same amount of money to closing. The house now costs you $220 to buy it, and the difference is $224
per month. Right.
For the same house.
So
it's the compounding pain of it costs more and the rate is more.
Right. So we're really lucky right now that rates are as low as they are. And just keep in mind, the Federal Reserve is, what are the odds?
83% odds that they're going to raise rates in June.
They're going to raise the Fed funds rate, which is going to push up the prime rate, which is going to make everybody's home equity line of credit go up.
Yeah.
It may not have an impact on 30-year fixed rates because everybody knows. I mean, today's rates reflect the assumption that it's going to go up.
Yes.
So we don't really have to worry about the 30-year fixed rate spiking. That could happen for any number of other reasons. But we are getting a lot of people paying off their balances on their home equity lines of credit right now as well.
For sure.
In that. All right. I want to get a little, I want to talk about the contingency, the inspection contingency, and how that can be handled or mishandled when we come back.
Right here on the Accunet Mortgage and Realty Show on WTMJ. If you have a question for Brian or David, you can reach us on the Accunet Mortgage talk and text line. That number is 414-799-1620.
Getting you into the home of your dreams. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Well, saying now is not the time to raise taxes. Governor Walker remains opposed to a gas tax hike in order to fund road repairs. You can hear his explanation for that, as well as whether he'll run for a third term as he goes one-on-one with John McCure in this week's edition of WTMJ's Conversations. Don't miss that discussion coming up here at 11:07 this morning. Talking about the inspection contingency, and also probably need to get to what happens when couples buy a house and then they split up but they're not married.
Right. Thank you for reminding me. I was thinking, what are we going to cover in the last segment? What are we going to cover? Okay, that's it. What happens when couples break up and they're not married? That's in particular. David's got one of those this week. All right. So, when you write your offer to buy a house, it's typically contingent on three things. I'm going to get an inspection done. I'm going to have an appraisal done, and I'm going to apply for a loan. And when you write that inspection contingency, what it gives you is the right to kill the deal if you find something that's called a defect. And a defect is something that will significantly shorten the life of the house, significantly impair the life or safety of the occupants, or diminish the value of the house if not repaired. Okay? So it's big stuff, like you find mold in the attic, or you have a basement wall that's deflected, or what have you. And sometimes they're not that big of an issue, but you want the seller to fix them. All right, so what happens sometimes in this hot market where sellers feel like they have all the power And what you try to do when you find defects is normally you propose an amendment. Okay, that's something that both parties have to agree to. And in that amendment, you'll say, hey, we're going to lower the price by $5,000, and you're going to give me a $3,000 credit towards prepaids and closing costs. And you don't say why, okay? But the real reason why is because I found some stuff that's wrong on the inspection, okay? If you say what's wrong out in the open air, and then your lender sees it because we have to get a copy of that amendment, we then will probably make you fix it. Mm-hmm. Okay, so if you say, hey, I'm lowering the price by $5,000 and I'm asking you for this $3,000 credit because the roof has only got 2 years left on it. Okay?
Yeah.
We're going to say, guess what? You get to put on the new roof right now.
Yeah.
All right. The problem that sometimes real estate agents get into is the seller's not responding fast enough, and we're right up against this deadline. Okay? And so it's kind of cool now and hip and trendy to provide a notice of defect,
which is a one-way communication.
Thank you for pointing that out. You're just like you're like Mike McCarthy throwing the red flag on the field and saying, I have found a defect, and I am going to cancel the contract or invoke the seller's right to cure if the contract was written that way. But you're throwing the flag, and in that notice of defect, you do have to specify what you found wrong.
Okay.
All right. So we got one this week where they simultaneously delivered to the seller the notice and the amendment, and what the notice reflects is if you accept the amendment, the notice dies, okay, which is cool. Okay. But then the problem was in the amendment, they referenced the notice of defects. Okay. So it's like, do I need to see what's on that notice of defects? Because if I see what's on there, I'm probably going to spoil the party.
Yes.
Okay. So my request for all real estate agents listening to the show, talk to your managers. I am thinking it would be perfectly fine to not reference the notice of defects in the amendment. You just say, here's what I'm proposing for the amendment. Do not make mention of the notice of defects in there. I don't think you have to, because that amendment is going to live and survive as long as it's accepted. And then all we have to do is put language in the notice of defect that simply says, if you accept the proposed amendment, this notice of defects is null and void. All right. There's your wonky realtor talk for the morning. But does that make any sense?
It does. And just the other side of that, though, is you can hold the seller's feet to the fire by including those items in the amendment if you want to, and then we can play bad cop and be like, got to get those things fixed before we close.
Right.
Happy to play bad cop.
That's right. We can do that. All right, when we come back from this last break in the show, we are going to talk about a real-life story that David encountered this week where a couple is breaking up, an unmarried couple, and that causes problems because they both own the house together. We'll cover how to handle that when we come back.
Right here on the Accunet Mortgage and Realty Show on 620 WTMJ.
Helping you find a place to call home. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
And here's the situation. You have a couple that owns a home together, but they're not married, and now they're breaking up. How do you sort this one out?
Yeah, so I got a call this week where a couple, he is on the mortgage, but they are both on title. And so she was exploring, would I qualify, is it possible for me to refinance the mortgage in my name and continue to live there? So when you're not married, there's no legal mechanism, divorce, for figuring out the house as part of the breakup.
Right, the division of assets, because they own this property together. Do you remember, because did we do the financing when they bought?
Correct.
Did they
did
they both chip in equal amounts of down payment?
I don't remember.
Okay.
But so one, I think, if she wanted to just be done, she could quit claim herself off title, and then it's his mortgage and his house.
Because he's the only guy on the debt right now anyway.
Correct.
Okay.
But
how does she get her money? Then she would have to negotiate with him to say, okay.
Correct. And I guess there's no, other than like people being nice, there's nothing that requires him to give her any, equity that might be hers in the house. So I guess, not to be unromantic, but if it were my sister and she wanted to buy a house with her boyfriend, I would say don't. Or I don't know, get married. or execute a little something.
We're in agreement. I know this is unromantic, but hey, if one of us, dies,
decides we want to move to Florida,
right, and the other one doesn't want to go to Florida,
how do we
unwind this joint ownership? All right, you also took the time, David, to respond to an article in the Wall Street Journal.
So there was an article from a Laura Casisto in the Wall Street Journal. Millennials want to buy homes but aren't saving for down payments, and the sub-headline was, less than 30% of them can't save for a 10% down payment in the next 3 years.
And you said to yourself?
To which I sent her an email in the kindest of terms.
Okay.
That her example in her article was for a Ms. Fontana in California who wanted to buy $1 million house. And so I'm knocking on her inbox saying, over here in the real world, we can lend money up to $424,100.
$424,100.
And you can put as little as 3% down. Because what the New York-based reporter is suffering from is a perspective on the coasts that, housing is more expensive. And when you're in jumbo world, 10% down is likely what you got to get to. But over here in Milwaukee, at least.
Well, and the median sales price for new constructed homes, we just said, was $309. So houses aren't $600 or $1 million everywhere.
Correct. And so what I just pointed out to her was, hey, you could put as little as 3% down for the maximum loan amount to be, regular.
Yeah.
And that's helping you buy a $437,000 house.
See,
and it could all come from a gift. So let's, quit crying. And I said, you know what, that mortgage would have PMI, the dirty word PMI. That would be $194 a month. But that's a pretty good trade-off for not having to save up the other 17% of your down payment, which on a big loan amount like that, that's $74,000. So just trying to represent middle America that the $1 million purchase price is not for everybody, although I guess you were noting $700,000 to $900,000.
Well, I'm just throwing that out there, but it is a kind of a coastal bias.
Yes.
And it is expensive out there. I guess I wouldn't want to have to be a first-time home buyer in a place, in a area. Although Fannie and Freddie do have higher loan limits in some of those higher areas.
But
so
that's like Hawaii and Alaska.
No, that's our homework assignment for next week. Just to be wonky, let's find out what is the maximum loan amount in this area of California. I have a feeling it might be like $650,000, something like that. So, at any rate, we have a wide selection, as David just said, 3% down on a regular 30-year fixed rate loan. The only requirement is that one of the buyers, if there's more than one, has to be a first-time home buyer.
Which only means you didn't own a home in the last 3 years. You can recoup your first-time home buyer label.
Correct. And so I would typically say you probably got to have credit of at least 680, for that.
Yeah.
We can do 5% down on jumbo loans, adjustable rate mortgages with 10-year fixed rates. I should be saying the APRs right now, but I don't have them handy. I hope my chief compliance officer is not listening. And then there's also, of course, FHA loans, which in the southeastern Wisconsin area have a loan limit of $299 now, David?
Yes.
$299,000. If you're in Kenosha or Chicago, the FHA loan limit is higher. I think it's about $388. And that works at 3.5% down. Again, all the down payment can come from a gift. And I think that's what, a lot of times news reporters miss out on the flexibility of down payments. So we've got a lot of options out there, and of course our favorite for Wisconsin home buyers, WIDA.
Kenosha's $365,700.
Okay, thank you, David, for clarifying that. $365,700 on an FHA loan. All right, this coming week, do we have the jobs report this week, or maybe it's too soon? That I believe comes out on Friday, the monthly jobs report. Then on June 14th, we've got the Fed meeting. The time to act to lock in a low rate is right now. For taking cash out, you've got home appreciation. You could either do that. We also see a lot of people paying off their loans faster. Another good reason to refi. And, of course, we were talking in the first half of the show about now is a good time to get back in. Maybe you were frustrated, maybe not. Now is a great time to become a buyer. All you got to do to get started is click on that blue button at Accunet.com. That's all we got time for today. Steve, we'll see you here next week.
You got it, and we'll check in with Colleen Boland from the WTMJ 24-hour newsroom next.
The preceding was a paid program. Advice and opinions expressed during the Accunet Mortgage and Realty Show are solely that of the hosts or guests of Accunet Mortgage and Accunet Realty Advisors and not WTMJ Radio or Scripps Media Incorporated.